Good day, Junior Tickies. I'm Mrs. Brimako. We are now going to look at Paper 2, Question 2. This question focuses on cost accounting. Now, if you look at the question, in total, it is 45 marks and 35 minutes. Again, make sure that you keep to the times given to you for each specific question. Now, this question consists out of question 2.1, 2.2, and question 2.3. We are going to break down this video into 3 different parts, where we're first going to focus on question 2.1, which is completing the production cost statement and the bridge statement of comprehensive income. In other words, the income statement. So if we look at the answer booklet, take note that some of the figures are already given to you on the answer booklet. You should know your formats. Your production cost statement, direct material cost plus direct labor cost equals prime cost. Information A, stock balances. They provided you with the finished goods stock at the beginning of the year and the end of this accounting period. There is no work in progress at the beginning or the end of the year. This is why if you take note of the production cost statement, prime cost plus factory overhead cost equals cost of production of finished goods. There were no opening balance for work in progress that we needed to add and no closing balance for work in progress that we needed to subtract. If you get the finished goods stock, you should know that when we complete the finished goods stock account, we want to calculate what is the cost of sales. So if you open up a T account and you complete the finished goods stock, the balance in the beginning were given to you 72,000. The balance at the end were given to you 96,000. Balance brought down means balance carried down. So we still got 2 unknowns. We don't know what is the work in progress, so we cannot calculate the cost of sales. They provided us with the sales, but they did not provide us with a markup percentage, which we can use to work out the cost of sales. So just make sure that you show your calculations in brackets. The opening balance is always added and the closing balance will always be subtracted. Raw materials issued to the factory for production is 1,494,000. The raw materials issued is equal to your direct material cost. So that figure has already been given to you. Information C, production wages. Information extracted from the production wages records. The net wage was given to you and then they said the total deductions was 22% of the gross wage. A reminder, when we look at the production cost statement and we look at the cost, it's always the gross salary plus contributions. That is an expense to us. That is the cost to the business. If we're looking at wages, it's exactly the same. It's always the gross wage plus contributions. So be careful here because they provided you with the net wage. This means we need to calculate the gross. So the net wage, if we look at the gross is equal to 100. If 22% was deducted for deductions, it means that the net is then equal to 78%. So to calculate the gross, you need to take times 100 divided by 78. And that will equal now the total direct labor cost. Information D, the bookkeeper calculate the following cost for the year ended 28 February. The factory overhead cost, selling and distribution cost, and the administration cost. All these figures are given to you on the answer booklet. Number E, sales. The total sales for the year amounted to 4,433,600. Again, that was given to you on the answer booklet, so you don't need to do anything with that. Now it was discovered that she did not take the following into account. The telephone account of 22,400 was posted in error to the factory overhead cost. The expense relate to the office. So please take note how we're approaching this. I'm not just focusing on the production cost statement and then going on to completing the breach statement of comprehensive income. I'm doing it at exactly the same time. So if there's a change that I need to make, for example, now with the telephone account, I need to make a change in the factory overhead cost and I need to make a change to the office, which means the administration cost. So what is happening there? Telephone account of 22,400 was posted by mistake in error to the factory overhead cost. This is an easy adjustment because we need to simply take out the 22,400 from the factory overhead cost and we need to add it to the administration cost. You just need to know if it relates to the office, it means it needs to go to the administration cost. The second one, the entire amount of rent expense, 98,400, was posted to the factory overhead cost. This expense should have been split in the ratio 7:2:1 between the factory, sales, and the administration department. So this is now a little bit more complicated. Now take note, there are different ways in which we can get to exactly the same answer. This is my approach. This is what I'm going to do. If I look at the factory, the rent expense is 98,400. So times 7 divided by 10. How do I get that 10? 7 plus 2 plus 1. This is what the factory overhead cost for rent expense is supposed to be. So to correct this now, remember the entire amount was posted to the factory overhead cost. So I need to take out 29,520. If we look at the sales, which is your selling and distribution department, 98,400 times 2 divided by 10 means that my rent expense, which forms part of selling and distribution, is 19,680. For the administration department, we're going to say 98,400 times 1 divided by 10. That equals 9,840. So when we're completing this now on our production cost statement and a breach statement of comprehensive income, we're first going to look at the factory overhead cost. We need to say minus 29,520. For my selling and distribution, plus 19,680. And for administration, plus 9,840. Again, a reminder, different ways in which we can get to exactly the same answer. The insurance expense of 26,400 was divided equally between the factory overhead cost and the sales department in error, so by mistake. 60% of this expense relate to the factory and the balance applies to the sales department. So this is also a little bit more challenging. How do we approach this now? If we look at the insurance is 26,400, which was split equally, so we divided by 2 between the factory and the sales department, the selling and distribution. So factory, we've added 13,200 to the factory overhead cost. To the selling and distribution department, we also added 13,200. To correct this now, if we're looking at the factory, if we take 13,200 divided by 50 times 60, because it's supposed to be 60%, or we can say 26,400 times 60%, the factory overhead cost is supposed to be 15,840. So this account is actually understated. The difference of 2,640 must be added to the factory overhead cost. So in my production cost statement, we're going to say plus 2,640. If we look at the selling and distribution, again, there's two ways, there's different ways which we can get to the same answer. If we take 13,200 divided by 50 times 40, because 100 minus 60 equals 40, or we can say 26,400 times 40% means that my cost should only be 10,560, which should actually be less. So to correct this, we need to take the difference of 2,640 and that must be subtracted from the selling and distribution cost. Now that we've done all the adjustments and we've taken all the information where it's supposed to be, and remember some of the figures were given or the figures were actually given on the answer booklet, we can now finish the production cost statement and the breach statement of comprehensive income. If you remember back also to the previous slide or previously in the video, we've got the finished goods stock, the balance in the beginning and the end. We still need to add the work in progress stock count or amount. In other words, the cost of finished goods produced. And then we need to subtract the finished goods stock balance so that we can find out what is the cost of sales. Just so that you can see again what I'm talking about, the finished goods stock, balance in the beginning minus the balance at the end. We still need to add the work in progress and then we can calculate the cost of sales. On our production cost statement, direct material cost plus direct labor cost equals prime cost plus factory overhead cost equals the cost of production of finished goods. That amount must be taken to the cost of sales in the breach statement of comprehensive income so that we can calculate our cost of sales. Gross profit, to calculate the gross profit, we need to take sales minus cost of sales plus other expenses. So to calculate the other expenses, minus other expenses. To calculate that, we need to add the selling and distribution plus the administration cost. That must be shown in brackets because this needs to be subtracted from the gross profit to calculate the net profit for the year. Now we've completed the production cost statement and the breach statement of comprehensive income. Now just some pointers again to remember. Do not just focus on one question. Fill in all the information which you've got. At the same time, while you're doing the adjustments, make the corrections everywhere you're supposed to make them by adding or subtracting from the totals that's been given to you. Then start closing the brackets and complete the formats. By completing the production cost statement, you would have noticed only once you've completed that, then you can complete the bridge statement of comprehensive income. In our next video, we are going to focus on question 2.2, the control of raw materials.